Today we have with us Mr. Butola, former chairman of Indian Oil Corporation. Thank you for joining us, sir. CAG has said that the OMCs follow a faulty pricing mechanism due to which they have incurred undue benefits of about 26,000 crore rupees. As a former chairman of India's largest oil marketing company, what is your take on the issue?
Yes, we have also seen the report and the press release which has been issued by CAG, and since I was working in Indian Oil till 31st May, we are also aware that they were conducting audit and they had submitted their report, interim report at that point of time. This report has been basically submitted to the Parliament now. It's a question of principle actually. So the government's decision as of now is that the companies, the oil marketing companies, shall be paid price on diesel on trade parity basis, which means 80% on import parity basis and 20% on export parity basis. And for LPG and kerosene, which are the two other regulated products, the pricing is import parity basis. This is a government decision and the OMCs have been following. However, CAG has said that no, the trade parity price is not the correct, it should be export parity price, and if the export parity price is considered, then there has been an overpayment of approximately 26,000 crore rupees of that. Now, so the question which one has to look at, what's the right method of pricing the petroleum product? And if you look at what is the right method of pricing the petroleum product, you have to look at the prevailing practices elsewhere in the world, in countries which are similarly positioned and are importing the petroleum product in their countries, etc. For instance, let's say closer home, Singapore, Japan, even China is also importing, Australia, New Zealand, etc. And Petrofed, which is an organization representing the upstream and downstream companies, was requested by the oil marketing companies as its members, also by upstream companies, to set up, conduct a study on this. And they had hired one of the major international reputed firms. They had carried out nowhere in the world the export parity pricing method is followed. You are aware, Kirat Parikh committee report was, Kirat Parikh committee was also commissioned by the government to study this very issue, that what is the pricing method that should be followed. They have also ruled out that export parity pricing method is not the right pricing. So, to answer your question, the export parity pricing method is not followed anywhere in the world by countries which are similarly positioned and are importing petroleum product. B, the Kirat Parikh committee, which was set up to specifically examine this particular question, has also not recommended that the export parity prices. So the whole question is to be seen that what's the right principle. Yes, CAG has a view, but there are umpteen studies which have pointed out that this is not the one could also look at the what happens if the export parity pricing method is. So if export parity pricing method is followed, then most of the public sector refineries, because public sector refineries, most of the refineries which are currently there were constructed, except Panipat and MRPL, they were constructed before 1985. And if I give you an example, Indian Oil is constructing now, it's in the process of completing its Paradip refinery. One single column, this is a 15 million ton refinery, and one single crude oil column, which is the mother unit for a refinery, of 15 million ton capacity. If you look at our Gujarat refinery and Indian Oil's Gujarat refinery, it's also 13.7 million ton, but there are 5 different crude units which are making this 13.7, because originally it was 3, it was expanded 5, similarly another unit was put up, a smaller unit, somewhere 1 million ton unit was expanded into 3 million ton, and more such units. So if you have so many units, then the energy consumption will be higher. So the point is that what should be the principle has to be seen, and if you follow, most of the refineries will get into losses, which is not good for the country, and then the alternative is to really import, which will be much costlier.
Sir, don't you think that the government wants only profitable, or for that matter CAG wants only profitable refineries to be working? In case they are not profitable, you should shut them down and just look for newer technology.
Okay, if you shut down the refineries, you know, a huge investment has been made. The employment, which is currently, I think the direct employment by the Indian refinery sector would be close to 80 to 1 lakh direct employment, and maybe 5 to 6 lakh of indirect employment. So you have to worry about this. And constructing new refineries takes own time, which is happening. Like I was talking about, Indian Oil is constructing, HMEL has been constructed, similarly other units, etc. You know, other companies, oil marketing companies in the public sector are also thinking of, you know, Indian Oil itself has a plan to set up a new West Coast refinery, of which will be again 15 to 18 million ton capacity, etc. So that's already, you can't really shut down at one go, and then there is a chaos, and then in the process you import crude petroleum product. The cost of this will be monumentally higher, you know, than what you are paying. You are talking about 26,000 crore rupees. Which is in a 5-year period, which is average 5,000 crore. But if you look at what in net, if you have seen the perhaps the answer which is being given by the Petroleum Ministry to this particular observation of CAG, they have said that in fact OMCs have in net contributed more than 26,000 crore rupees. So there is no under recovery if you net that. So, I mean, you have to see from what context you are seeing.
So it has also been said that the refinery margins have not improved. They have given a list of different refineries and their margins that they have made. So even though they are making higher amount of money by having a different kind of pricing mechanism, the refinery margins, or for that matter, the competitiveness of the refineries has been questioned.
There are two reasons for this. The older refinery, which I said, which were constructed before 1985, I have told you that, you know, instead of having one large unit like Reliance itself, if you are talking about, you know, private sector refineries, etc., their single unit would be 15 million ton, Paradeep is 15 million ton, etc. Whereas the older refineries are small refineries which have multiplied. If you have so many separate units, etc., obviously your energy cost, etc., is going to be, your sum total of all the costs will be more than one single unit, number one. Number two, you know, all these are all landlocked refineries, and the crude has to be, if you compare them with the coastal refineries, because coastal refineries don't have to incur these additional costs, so that's an additional cost which you have to worry about. And these decisions have been taken for various factors, that socio-economic development of the backward region, development of, you know, all the state, etc., so that all the states get benefit of this. So some of the, you know, like imagine crude oil has to be imported from Middle East, Nigeria, etc., and it has to be transported to Paradeep and then up to Haldia, Barauni, and also feed Bongregam refinery, etc. It becomes all that much costly. So the public sector refineries obviously are suffering this inherent disadvantage because of the location vis-a-vis the coastal refineries. So one has to look. On top of that, there are so many incidents of taxes. In some of the state, you know, you have to pay, they have imposed entry taxes. That means you will bring crude oil, like in Mathura, the government of Uttar Pradesh imposed entry tax. That means if a crude is brought into the state, one has to pay 5% tax on the, which is not in other state, etc. So there are so many anomalies which make the public sector refineries inherently disadvantageous as far as the refinery margins are concerned. Some of them, I am agreeing, are on their own account because these are older refineries, you know, but some of them are also because of external factors.
OMCs have also been accused that they have been buying petroleum products from private refiners at a higher cost. Don't you think they could have negotiated it at a better price?
No, the option, one who has a surplus product, they have the option to export. And what CAG has in their observations has believed, that the exports will necessarily happen to Middle East, because they have taken the FOB Arab Gulf price as the base price. What it means is that all Indian exports will happen to Middle East. It may not be true, because Reliance has been, some of the private sector refineries have been exporting to even North America. They've been exporting to even East Asia, etc., and where the margins could be much different. So to say that if you are buying from private sector refinery, they have this option. They can sell air. So why will they give you cheaper than the prices if they can fetch it can fetch a better prices? So it's all negotiated, and based on the negotiated price only, the OMCs have believed that yes, whatever trade parity or the import parity for the product, etc., is the price which they also need to be paid to to private sector refineries as it is paid to their own refineries.
Sir, let us assume that the government opens up the whole sector. At the moment, it's controlled, even though there have been talks of decontrolling the sector, but somehow the oil marketing companies are controlled. In case today the government actually liberalizes the whole economy, the whole petroleum economy, do you think you can compete with the private sector refineries?
This is what we have worked all these years, and certainly, because public sector refineries to believe and go with this premise that they're inherently inefficient is wrong. After all, who's running the private sector refineries, etc.? Most of the people who have gone from public sector. So in terms of the competence, now there are certain inherent disadvantages arising on account of a location, etc. There are certain taxes which are making them, So once a decision on deregulation will happen, all this will also change. Plus, over this period of time, the OMC refineries have been very mindful that we are moving towards deregulation. For instance, diesel, where the gap was, by increasing 50 paisa every month, the pricing gap is almost getting closed. It came to 3 rupee 40 paisa per liter. Last fortnight it may be 2 rupee 50 paisa or so. I mean, in that range. Subsequently. So it is already getting close. So they have been mindful, and they have been investing in their refineries so that they are able to come up. But certain external factors in terms of taxation, Indian Oil, as I mentioned to you, is thinking of setting up this decision will only get faster and faster the moment Indian Oil sees that yes, we are moving towards complete deregulation now. And I have no doubt that over a period of time they will be able to stand, in good competition with private sector.
So, do you think at the moment the oil marketing companies lack transparency and autonomy?
Certainly not. Because their accounts are audited. Even the reimbursement of the under recovery, which is mentioned, is audited by the PPAC. And recently also an audit was conducted by the cost account branch of Ministry of Finance, because after PPAC had audited, they also wanted another audit to be conducted. And earlier also, and even Kirat Parikh has mentioned in its Kirat Parikh committee has mentioned in its report that even the cost account branch has said that if you are to go on the cost plus pricing method, which was prevailing before dismantling of the administered pricing mechanism till 2002, the price which is paid under trade parity or import parity price is almost equal. There is a very small gap. This is their objection. We know for a fact that this is the situation. So to say that the OMCs are being overpaid, etc., is not entirely based on, I would say that the correct understanding of how the product should be priced.
The CAG report has also said that the subsidy sharing mechanism is very confusing and it needs to change. You have, being the chairman of IUC also, you have been saying that you do not get your subsidies on time. In fact, you incurred a loss of about more than 20,000 crore rupees on interest payment for getting loans for working capital. So do you think there can be some changes in the near future?
Just to correct the facts, Indian Oil suffered. I'm talking of Indian Oil. You are perhaps talking of all the companies taken together. Indian Oil Corporation paid an interest of over 3,300 or 3,500 crore last year on account of delay on account of receipt of cash compensation from the Government of India on the under recoveries. That means the bottom line of Indian Oil suffered 3,500 crore. Purely this money should have been borrowed by the Government of India and given to Indian Oil in time, but since it was not paid, it had to borrow this money from the market, etc., and in the process suffer these unreasonable excess cost of interest. Last year also it would be in the range of 1,800 to 2,000 crore rupees, etc. Now what CAG has mentioned, that there is no certain mechanism. The oil companies have already been saying, both upstream companies and downstream companies has been requesting the government that they don't mind contributing, to, if the government wants to import, but it should be done by way of proper legislation, and it should be certain, so that our investors, oil companies investors, whether they are upstream companies or downstream companies, they are certain, there is some predictability and certainty about how much of subsidy they will have to share. So it only brings more transparency, and we agree if CAG has made that observation that yes, there should be certainty and predictability about what compensation mechanism or how much subsidy should be shared. So there is absolutely nothing wrong in that.
CAG has also talked about the fact that there is a requirement of rationalization of state taxes. You have also been saying that the states are not rational when they put taxes on crude oil and on different things.
Certainly.
So how do you think this issue can be resolved?
What I would say that what I have read in the newspapers, press reports, that since we are suffering these taxes in various states, and if you charge entry tax on crude oil, it's not a pass through. Like set off is given if you are buying a product in one state and selling it somewhere in another state, etc. So you have paid, while if I have to buy petrol, let's say from somebody, and sell in another state and pay tax, I'll be able to set off. But if you pay taxes on inputs, they are not allowed as set off. So the companies were suffering hugely on account of these taxes, etc. So the companies went to the government, and a scheme was worked out whereby we call it a state-specific taxes duty, whereby these taxes which were not passed through were being recovered over a period of time by way of working some methodology and passing on to the consuming state, etc. I have recently read in the newspapers that the Ministry of Petroleum has written to all the states to reconsider and withdraw some of these taxes which cannot be passed through, etc. And I would say some movement is there on that. And yes, I would agree with your observation that they should be rationalized.
Sir, one crucial question. In 2010 June, the government deregulated the petrol price. But even after the deregulation, we have always seen there is a lack of competition, because it seems that whenever an increase in price of petrol announced, it's uniform across the oil marketing companies. So where is the competition in the market? If it actually has been deregulated, why is that all the OMCs change the price on the same day and in the same amount?
These are internationally traded, these are the depth of the market in the petroleum products is very deep. These are very deep markets whose product is traded every day, and you see on your ticker what's the price of crude oil, what's the price of diesel, what's the, and every day, every moment you can see it's moving, etc., etc. So unlike other products, this is a highly traded product, and if the prices are not same, there will be immediately some arbitrage, And if that, again, that because of somebody taking advantage of that arbitrage, the prices will be brought back to almost same level. What could perhaps happen? And still, I mean, the prices are not same in even today's newspaper have reported in some states they are costly. That is because the taxes, etc., etc. Or maybe the other factor could be that the transportation. You know, in some of these states, if you have to move it away from the refinery for a longer distance, etc., those to that extent, those differences would be there. But by and large, to expect that there will be big, even if there is a complete deregulation, you know, there could be short periods when the difference could be there, but in a longer period, if you look at averages, there are not, I mean, these differences between various companies, you know, like the economics say, in a perfect market, you cannot either make super profits or you cannot. So the prices tend to be around a equilibrium in a perfect market.
Are you saying Indian market is a perfect market?
No, I am saying in a perfect market also there will be around that equilibrium. And here also to expect that these prices are at the same level by, you know, etc., by the different companies, or because they are regulated, etc. I am saying that even in a perfect market there will be around equilibrium. So there is not, this is the way, this is the, because there is a deep trade in this market, there is a large trade in these products, etc. The prices tend to be, I mean, there is just no way. I mean, somebody will be incurring huge losses if one is to sell that at deeper discounts, etc. So I am agreeing that while in a competitive market there could be discounts, etc., but they cannot be sustained for long. So in a long run, on an average, there will be equilibrium. The prices of whether private or public sector refineries will be around same level, barring local differences, etc., which I pointed out.
All right, sir. Thank you very much for talking to us.
Thank you.